of Nifty is 50. The lot size of Nifty is 50 and the spot is at 18,500. So the lot value of Nifty is around 9,25,000. So to be on the safer side, I'll always say the lot value of Nifty is at 10 lakh rupees. So for every 10 lakh rupees which you have in your account, you can go long in one lot of this strategy. So here what we are going to do, we will be using December options to make a synthetic future. So how do we do a synthetic future? So we are going to, is anyone speaking? Please mute yourselves if someone has it unmuted. Yeah, so the basic structure is we are going to buy a synthetic future in December. So how we are going to do that? We'll go long 19,000 call. We'll sell a 19,000 put option. So this is a synthetic future. This works as a synthetic future. Yeah, okay. So this is a synthetic future. And to protect against the downside, although we don't need any protection because we have 10 lakhs worth of cash in our account and we can take delivery of one lot if we wish to. But still in the strategy, what we are going to do is we'll hedge the downside. And for that, we'll go and purchase a put option, which is at around 1,000 or 1,500 points away. So at this juncture, if you check Nifty right now is almost at all-time high. Nifty almost is at all-time high. So if one is going long at this point of time, I'll say the protection which is required is much more than if you invested when Nifty was here. So right now, when we are trying to invest at all-time high, I'll say the protection should be good. So I'll just purchase a put option which is 1,000 points away. Had Nifty been around 15,000 right now, I could have gone long 15,000 call. I would have shorted 15,000 put, and I would have purchased a hedge which is 2,000 or 2,500 points away. But right now, just because we are at all-time high, our protection needs to be good. Hence, I'll be purchasing a put option which is just 1,000 points away. Is everyone clear? If someone just lets me know once in a while, am I audible or not? It will be good.
Yes, you're audible. You're audible. Quite clear.
Yeah. Okay, thank you. So, and this is the basic structure which we will be creating in December. If anyone wishes to take the strategy right now, this is the basic structure. Post which, in this strategy, we'll be losing 72,000 rupees by December if market doesn't go above 19,451. So to protect against this loss, what we are going to do, we are going to sell weekly call options of around 20 rupees. So right now 18,800 call option is around 17 rupees. So for one lot which we have went long, we are going to short one lot of this option. So post this, the strategy will somewhat look like this. So this is the basic structure. The management needs to be done in this option. Like if market goes up, we'll have to manage this call option because it's having a tail risk of unlimited loss on the upside. We don't mind we don't mind the downside risk because the downside risk is capped here. But once we are shorting a 18,800 call option naked, it will have unlimited tail risk, which obviously is hedged with the future, but the risk is there, which will it will reduce the profit potential which is there on the upside. So management might be required for this option if Nifty touches 18,800 on that week. If it doesn't, we need not worry. So I'll think whichever person is taking these trades, they're new to option trading and they don't know a lot of adjustments. So for that, I'll say the only option which a newbie should be applying if someone is taking this trade is, sorry, Yes, Reddy sir, are you saying something?
Oh, sorry. My speaker is on. So I'm sorry. You can
Yeah,
carry
yeah.
on, please.
You can mute yourself, sir. You can mute it.
Yeah.
Yeah, no issues. Yeah. So I'm thinking whichever it's better for us to think we don't know a lot of things or we don't know a lot of stuff. So keeping that in mind, I'll tell you the easiest adjustment which can be done if your this call option is going in the money. There are a lot of other adjustments, and those people who already have a lot of experience can do those. But I'll just think all of you are newbies. So the best adjustment for this is rolling over to the next expiry. So how we will do that? So let me just remove these things for the time being. Yeah. So we have shorted a 18,800 call option. Let's say market expires at 18,900 on 15th June. So this 17 rupee option which we shorted, it will close at 100 rupees. So we will lose 100 minus 17. We will lose 4,150 rupees per lot of this strategy. So how we will recover this 4,000 rupees which we lost? We will have some unrealized gains in the December options, but those are our investments. So we are not going to book that. So in that scenario, what we will do? So if you have lost around 4,000 rupees, we will never sell an option which is more than 50 rupees in worth in weekly options. So if you lose 4,000 rupees and the max which we can collect in a week is 50 rupees, we can only collect 2,000, 50 into 50, 2,500. So we can only collect 2,500 rupees of credit each week from the weekly expiry call sell. So if we lost 4,000 rupees on a particular week, we will try to recover back this money by using 2 weeks of options. So first week we will try to recover 2,500, the next week another 2,500, but we won't be trying to recover the entire amount in a single week. I went a little too fast. Did everyone get it, or should I explain it again?
It's okay, no problem.
Yes, sir. So, I know I went a little too fast, and I know with around 30 people, everyone will be having their own learning curve and experience. So, some might get, some might not get what I spoke about. So, if anyone is not understanding, you can always pause me and I'll explain it again.
Yeah, I have a doubt. Like first week you sold like around 17 rupees or 18 rupees. So
Yeah.
if it is goes to 100, so next
Yes,
week onwards you're going to sell maximum, you're going to take a credit of maximum 50 rupees, right?
Yes, sir.
Okay.
Because if we have lost 100 rupees and right now VIX is around 11, if you just check for any if you try to collect 100 rupees, that might be at the money option. If you check 18,550 call option right now, because spot is at 18,563. So 18,500, the at the money option is 100 rupees. So we are not going to take that much risk and sell an at the money option. So we will go far. We will sell 50 rupees one lot, and in the next week we will try to recover another 50 rupees.
So
Okay,
basically, we have to sell out of the money maximum 50 rupees, right?
Yes, sir. Maximum at any point of time we will sell 50 rupees. Again, sir, there are a lot of other adjustments which can be done, but I am designing the strategy for a person who is completely new, so that he doesn't face a lot of issues while managing the trade.
So ठीक है, मतलब I should not bring martingale in the picture. सारे लोग confuse हो
You
जाएंगे.
can, sir, you can martingale. I will martingale in my case because I have a little experience, but I am telling जो सबसे नए बंदे हैं, जो बहुत जिनका ज्यादा experience नहीं है, for them this is the strategy which I have designed, which is much safer than martingale or any other adjustment style.
Sthita sir.
Fantastic.
Yeah.
Hello.
Yes, sir. Yes, sir.
By
You're
selling
audible.
the options of 20 rupees.
Yeah.
We are trying to gather money which were employed by buying the put 800 to 1,000 points away.
Exactly, sir.
So approximately by your experience, 800 to 1000 points of a put might be pricing at what price?
Sir, there is no answer to that because we are in June month right now. Some
Yeah.
person might deploy it in January, someone might deploy it in
No,
October.
presently, sir, presently.
Presently, 1,000 points. See, presently, if we go long in 19,000 options, actually we should go long in 18,500. But in December, the 18,500 for some reason is not visible.
Yeah.
So I'm
Price
giving
might
an
be
example of.
less liquid.
Yeah, maybe, but it's not visible entirely. So we'll go long in these options. And the 1,000 point away put option is currently at 260 rupees.
Oh, so that's a
270.
great. If we sell 20 rupees also, it will compensate somehow.
Obviously,
Yeah,
we will
okay.
get much more. If we collect 20 rupees, we will get much more than the 270 rupees which we paid for.
Yeah, got it. Thank you.
Yes, yes.
But the weekly, Satish, the weekly call option that you're selling for 20 rupees, why do we
Yes,
need
sir.
to allow? Why do we need to allow it to the expiry in it? For example, can we put a stop loss? Let's say sell it at 20, and it becomes
Yeah.
For 40
40.
net, right? And you can close
Yes,
it,
sir.
right?
Yes, sir. Yes, sir. See, you have a little bit of experience. That's why you know it, and you suggested it. That's a great idea. You can do it. In some
Other thing that I would
instances,
suggest, yeah,
Yeah.
just one. Since you have been doing this strategy for quite some time, if you can show some historical data later on, how you managed it, that will be really helpful for everybody.
sir, if I show you, see, even if I show you historical data, what adjustment I did and it worked out, it might not work out for someone else. Why I'm saying so? Because my psychology fits right with managing huge M2M swings. That might not be the case for everyone. Someone might be wanting very smooth equity curve, very smooth M2M fluctuations. So for them, it will be very troublesome if I give you a complex management criteria, and then people have to deal with that.
Yeah,
And-
trading is more of psychology than the charts and all those things. Psychology prevails above all those things.
See, everybody
Yes,
talks about psychology, talk about risk management, but the point here is how did a person manage this? If you look at many of them, they don't. It'll be good if you can
Brushes,
show
sir.
how you managed it, irrespective of the risk and psychology, put that of it, yeah.
Yes, sir. I can show you. So the only see if an option, a call option is going in the money, you can manage it by selling put options. That is the basic structure. The other structure is you can make call ratio spreads, like debit call ratio spreads. But if I start talking about that, there are hundreds of instances and hundreds of adjustment criteria. We won't be able to complete it within an hour. I hope you are getting my point, sir.
Yeah, I got it. But one of the key thing is you chose a synthetic feature based on December, right? Which is
Yeah.
leap type of a thing. Any reason why you chose a leap rather than going for a Nifty B or something?
Yes, sir. I'll get to that. I'll get to that
Okay.
in the next few minutes.
Thank you.
Yeah. Yeah. So the basic structure, I guess everyone understood the basic structure. 20 rupees ka we will be selling call options each week. If it is expiring in the money and we are losing more than 50 rupees, from the next subsequent weeks, we will only be selling 50 rupees call options and try to collect 2,500 rupees credit per lot each week till the time we recover. Post the recovery, we will shift back to 20 rupees call options. And why this adjustment will work? It's because when market is going higher and when we are almost at all times high, it is very unlikely for markets to make constant moves of 200, 300 points each week. On the downside, it can move 1,000 points in a day as well, but on the upside, it won't be. The probability of it moving on such a fast pace is little. Again, Debashish sir, can you please mute yourself? Yeah, thank you. So another thing, sir, the game is completely about risk reward and probability. I talked about that in a video on my face-to-face video about positive expectancy. I'll take this moment to again talk about that. Whenever we are selling out of the money call options, so this 18,800 call option, the delta of this option is, sorry, So the delta, why is it showing 0.1? Just give me 1 second, sir.
Sthita,
Yeah.
this 20 rupees you are selling because it's 1% of margin, no? That's why you are selling 20 rupees.
Yeah, it's because of that.
Okay.
And the other reason is we are collecting. So, okay, I can show you my live position as well. Just remove these two. So I am going long 1 CR. So I have made an investment of 1 crore. So I have gone 10 lots long here. I have shorted 18,000 put option. I have gone long in 18,000 call option, and I have purchased the 17,500 put option for the hedging. So I am sitting at a profit of 6% because the entire thing is for an investment of 1 CR. Yeah, so we are here. Yeah. So the 18,800 call option, which I was talking about. Okay, I am not getting it. So here it says the delta is 0.16. So can anyone say what does delta of 0.16 mean? It is showing 16, but it's 16. Yeah, 0.16. So can anyone say what is the meaning of delta 0.16?
If 1 point move in underlying, the price of this call will move 1.6.
Yeah, so on a 10-point move of Nifty, this will ideally move by 1.6 points. Or on a 100-point move by Nifty, this will move by 16 points. You're right, sir. And the other thing which delta tells is the probability of this option expiring at the money on expiry is 16%. That's why the delta is 0.16. If we just check for any option which is at the money right now, if you just check 18,500 call option of this expiry, so that has a delta of 0.6. That's because it's slightly in the money. Right now, spot is 18,500, and if you check for 18,850, that will come around 56. Okay. So 0.5 is the delta. That means on expiry, the probability of this option expiring at the money is 0.5 or 50%, 56%. So whenever we are shorting an out of the money option, by default, we have a probability of more than 50% of that option expiring in the money. So at that point of time, we just need to have to maintain a risk reward in such a fashion that we have a positive expectancy. And what do I mean by positive expectancy? If this option has a probability of expiring in the money by just 16%. So if we are playing a game of, let's say, 1:0.5 risk reward. So when we are playing a game of 1:0.5 risk reward, whenever we make money, we will make 17 rupees. And whenever we lose money, we will lose 34 rupees because we are playing a 1:0.5 risk reward. But the thing is, 84% of the times we will make money. Is there everyone clear, or did I like again go too fast?
No, it's okay. The probability of winning is more than the probability of losing.
Yeah. So what do I mean by positive expectancy? We are let's say we took 100 trades. So by Greeks, we know that we will win 84 of the times and we will lose 16 times. So the times when we won, we made 84 into 17 rupees. So into 50. So the times where we win, we make 71,400 rupees. And for the times when we lose 16 into 34 rupees into 50. So we lose 27,000 rupees entirely if we take 100 trades. So this is a positive expectancy, 71,400 and minus 27,200. So net we are making a profit of 44,200 rupees. So I just gave an example how to maintain a positive expectancy. Similarly, if you are shorting at the money options, we will have to have a lot more, a lot better risk reward. Here, even if we have a 1:0.5 risk reward, still we are winning. But if you are selling at the money options, which have a probability of 50% of the times it will expire in the money, 50% of the times it will expire out of the money, there we will have to keep at least 1:2 or more, just to have a positive expectancy and make profits in the long run. In the short run, market might constantly go down, and this call option which we are selling, and in the next 100 trades, the call option might go to zero. But in the long run, if we don't maintain a positive expectancy, however profitable, like the POP, the probability of profit might be 90%, but still, if we don't maintain the risk reward, we will be on the losing end. Am I clear again? I know I speak too fast because I'm not a great orator. Whenever I get this opportunity, I just fumble and I go a lot fast.
Perfect,
Is
sir.
everyone
Perfect.
clear? Okay, thank you, sir.
Just one clarification on it. This delta is on the day you take. For example, as it is moving closer to the strike price, then the delta will obviously keep changing.
Yes, sir.
Then how do you manage this part of it?
We don't manage, sir. We will
How
calculate the.
does it impact the overall?
Sir, just like I mentioned, our idea will be to maintain a positive expectancy, and we can. Yeah, so the idea is we will be trying to, we'll try to maintain a positive expectancy, and we can do that just by keeping either we can keep a stop loss. iPhone, I guess my voice is okay, echoing. Yeah, okay, it went down. Yeah, so we can do that by either keeping a stop loss, or we can have a strategy where we are either martingale or we are rolling forward to a further expiry to recover back whatever we have lost this expiry. That is the only technique. Again, sir, you are experienced, you know, we can sell put options, we can sell like we can buy bull call spreads, we can sell bull put spreads. All those can be done to manage our existing call sell. But I don't want to like complex the strategy. I don't want to create complexity in the strategy.
Understood. Okay, thank you.
Yeah. And further on, why I'm not purchasing Nifty Bs along with a put option buy, and why I'm saying to do it in F&O. The 10 lakhs cash which we currently have, that needs to be deployed in such a debt fund which will give us more than around 7% return. So that we can get if we invest either in government bond or in a good corporate bond which gives us more than 7%. A Bharat bond is another alternative which we can go for to get this return. So the 10 lakhs which we had cash in our account, if we get around 7% return on that, we will get around 70,000 rupees. So in a year's time. So in a year, maybe for hedging purpose, we will lose around 1 to 1.2 lakhs in the worst case scenario. Again, it depends upon the VIX and volatility and everything. But if I just show you right now, 19,000 call buy, 19,000 put sell, and 18,000 put buy. Yeah. So here we are paying. Yeah. So here we are having a risk of 72,000 rupees, with the put amount which we paid is around 13,400 rupees. So the absolute risk which we have in this strategy is 72,000 rupees with 6 months to expiry. So if we get an instrument which is paying us 7% return, in 6 months we will make 3.5%. So of 10 lakhs, 3.5% is 35,000 rupees. So from this 72,000 rupees, 35,000 rupees anyway we will be recovering back. So our target here is to get back the other 37,000 rupees which will be at risk, and that we need to get back by selling these weekly call options. And I just showed you if we have around 6 months left. So we will be having around 26 weekly expiries, 20 rupees each week. We will make around 26,000 rupees. So we will almost recover back the loss amount which we might be incurring if market doesn't go above 19,450. The best part about this strategy is if market cracks by more than 30-40% right now from 18,500, if market moves to let's say 14,000 or 15,000, the max risk which we have is only 72,000 rupees less the 35,000 which we will be again recovering back, less the call option sell profits which we will be incurring. So net to net, the strategy is very safe and can be deployed by anyone who is having 10 lakhs free cash in their account. Again, I went too fast, I guess.
Just one question. For this strategy, what is the capital required?
So for one lot, you need to have around 10 lakhs cash.
That's right. But for this actual margin, what is the amount required?
Yeah, so for the margin required will be around 1.2 lakh, I guess. Just give me a second.
What is 35,000 rupees gain you are talking about?
Just give me a second, sir. I'll show you this thing and I'll let you know. Yeah. So the strategy is this. Okay, it doesn't show some error. So I'll tell you, sir, it requires around 1 lakh margin to deploy 1 lakh, not more than that. Right now it's showing something wrong, maybe because I have M2M profits. I'm not sure exactly. Yeah. So the 35,000 rupee which I talked about, sir. So the 10 lakhs cash which we talked about in the starting for deploying one lot, that 10 lakhs we will be deploying on a debt fund, which will be giving around 7% risk-free returns to us every year. So right now we are in June month, so 6 months are left. So in a year, if it is giving us 7%, in 6 months time, it will give us 3.5%. So 3.5% of 10 lakhs is 35,000 rupees. So that is what I was talking about.
Okay, okay. That is outside of it in any case. Okay.
Yeah. And
Sir,
the
sensible
other,
pay the margin, sensible pay margin, it is showing us 72,000, including the hedge that we have bought.
perfect. That's what I was not sure exactly how much it would be taking. So around 75,000. And when we are selling a call option, again, it will increase a bit more. So maybe around 1 lakh or 1.2 lakh will be the margin required to deploy one lot long. Am I clear? Does anyone have any other doubts at this juncture?
Yeah, clear.
Yeah, so I think, can you please repeat the strategy once on a high level? That will really help to get the
Sorry,
high
sir,
level.
I could not hear you. Can you just tell me?
Yeah, I'm asking, can you please repeat the strategy once so that we can get a high level view again?
Yeah. So let me just explain it again. So we will be creating a synthetic future. What do we mean by synthetic future? We will be going long call. We will be going short put on a particular strike. Most likely that should be at the money. Here, I don't know why 18,500 put option is not present in the option chain. That's why I'm giving the example of 19,000. So we will be going long 19,000 call. We will be going short 19,000 put. So this is our investment. And to hedge this investment, we are going to purchase a 18,000 put option for around 270 rupees. So this 270 rupees we need to recover, and that we will be doing by selling weekly call options. So weekly call options we can sell at around 20 rupees to recover the amount which we are losing, because this in this option theta decay will happen, and over time this will give us losses. So I can show you even in my example. This 17,500 put option is for hedging purpose, and this is losing 50,000. My investment is making money, but still I'm losing here. So that amount which I'm losing, I'll be trying to recover it using the call sell. So here, just as I told you, the strategy which I explained is for a basic person who has very limited knowledge. I sold a rupee 40 option instead of a rupee 20 option because I knew market is at all time high and at any juncture it can reverse. Hence, I took a higher risk and I sold a rupee 40 option. Ideally, we will be selling rupee 20 options.
When this December option, this position was entered into December positions.
So these the positions were entered in tranches. I don't. There is no exact date. I added 2 lots. I added 2 more lots. 2 more lots. I started adding the positions when Nifty was at around 16,000 during the Ukraine Russia war. Sorry, not that at around this juncture. Oh, sorry. Where was it? Yeah,
Sthita,
yeah. I
Sthita,
added here last year. Yeah. Yes, sir.
yeah, yeah, actually, this 40 minutes limit is actually exceeding. So do you want me to generate another link from Zoom?
Sorry, I could not get you, sir.
Yeah, this 40 minutes limit of the meeting is exceeding. This I discussed,
Yeah.
yesterday. So do you want me to generate
Yeah,
another
yeah.
link? Because in
Please,
1
sir,
minute.
please.
If you're not done that,
Uh,
what would be the profitability today?
okay, so if I didn't do that, the first put option which I had purchased, I don't. Okay, I guess we can check in my P&L. I will just check in the P&L.
It doesn't
December
matter. Just
option.
that you said you took it around 16,000, right? So on that day, yeah.
Yeah, I'll just check in December options. I can check how much I purchased that option for. Okay, Nifty December. Okay, I'm not sure why it's not showing. Uh, let's check for 17,000 put option. I'm not sure, sir. For some reason, it's not showing. So I can't tell you at what price I purchased it. I can say I have booked around 2 lakh loss in the put options, in the purchased put options till now. So if the currently it is at 6.13, maybe I have lost around 2 lakhs in the purchased put option. So at around
Okay.
4% gain. If I didn't do any other adjustment. But again, I'm also making money in my investments because this is not the entire strategy. The strategy is I have purchased some debt funds, and against that I'm making money. So in my case, I have purchased government securities and liquid Bs and Bharat bond. So I have a ratio and I have invested in that amount. So making anyway. I'm making 4 to 5% here. So that is the same. So for 1 CR, I have around 2 CR worth of uh, Bharat bond, liquid Bs, and government securities.
Okay.
You have posted
So we
that.
have to.
You have posted that video of the Govind, na face-to-face meeting with that Govind.
Yes, sir. Yes, sir.
You
I
said,
picked up the strategy from him.
yeah. How is it actually different from? What is the difference between what you are telling now and what he stated there?
Sir, in his strategy, there is no call option sell in weekly basis, and also he suggests to take synthetic futures in 3 months, and then he suggests to roll over after every 3 months. He only tells to buy the put option in December. But in my strategy, I have the entire thing in December. I don't need to do any changes. I just need to manage the weekly call options. So there
Okay.
are some benefits of his strategy. There are some benefits of my strategy. In my strategy, I can say ki the risk of the purchased put option that we are at all times gaining back. In his strategy, that thing is not there. But again, in my strategy, the risk is a bit higher because we have to manage the call option in case market moves a sudden up move. In his strategy, there is no such risk.
I think there's a small deviation. I
Sthita,
think Govind talks about 30% buying ETF. For example, in 1 crore, buy for 30 lakhs the
Yeah,
ETF, pledge the 30 lakhs,
yeah.
and use that 30 lakhs pledged amount to buy the futures and then do it and buy a put option. The remaining 70
Yes, sir. In
lakhs,
my strategy, yeah. Yeah, I know. In my strategy, I have completely deployed debt funds. I don't have any equity.
But how did you manage the bid ask difference? Because I once tried long term leaps in it. The bid ask itself eats
Yeah.
away the profit.
How much do you think is the bid ask difference, sir? It's not more than
We had a
5%.
difference of straight away 5,000 rupees.
You're saying there was a bid ask of 100 points. I don't think. Maybe you looked at 915 pricing or 330 pricing or
This was
aftermarket pricing.
last year, and the VIX was very high. I straight away lost 100 bucks on it.
Sir, you must have put a market order. If I just check right now, if you check 19,000 call
Hey, it's a
option,
market order because I was doing the strategy, right? So I had to buy and sell. Then only you get the benefit, right?
yeah, market
Sudha,
order you did, sir. Yeah.
yeah, Ram here. So maybe you have tried not round numbers, like in December. If you look at the chain, you can see that the bid ask difference is much high in 18,500, 19,500, 17,500, etc. If you look
18,
for
sir, can you show me the 18500 chart or 18500 strike? I am not finding it actually. Can you share your screen and show me?
It's
insensible
not coming actually for some reason.
Insensible. Can you just show
18,500
me a
won't
screenshot?
show. Yeah, 1 second. Let me
18500 is
just.
not present, sir. 18,500 put option is not present at all. Yes, sir. So I just skipped someone's question. Satish, sir, you are asking something.
Yeah, that's right. Basically on the bid ask only. So because when you're trying to sell, so you look at the
Yes,
limit
sir. But
order and
most likely, yes, sir. So if you be just a little bit careful and use limit orders, Zerodha anyway won't allow you to buy market orders. So if you are using limit orders, it should not be an issue because I am working with 10 lots and 20 lots, and I am not facing a lot of slippage.
okay, that's good.
Sthita,
Yes, sir.
Sthita,
Yes, sir.
yeah, the Vishwarup. Just
Yes, sir.
need
Tell me.
to ask you, yeah, since the investment, the return from investment that you are doing by pledging the instruments,
Yes, sir.
this also forms a part of strategy. Like, what would you suggest for a person who is having capital of suppose 80 lakhs in an age group of above 35, the debt to equity ratio, so that the margin can be used to do this strategy?
Sorry, sir. I could not get your question.
No,
Can you
actually, I'm
repeat?
asking the
Yeah.
pledging instrument that you have pledged, no?
Yeah.
So, what should be ideal debt to equity ratio of the pledging?
For
Because
someone who
the
is 35 years old.
yeah, that's what I'm asking.
Uh, Sir, the theory is what is your age? That should be the debt percentage. So if you are 35, you should be having 35% debt. But I don't agree to that. I always feel ki we should have more debt instead of equity. So if
Okay,
someone is 35, I'll say the ideal risk to like debt to equity ratio should be 50-50.
okay, okay.
And
Sudha, I
yes,
have a
sir.
question here. You talked about Bharat bond as a instrument against which we can pledge and take the F&O positions.
Yes, sir.
So, can you exactly show me what those Bharat bonds are and how can we find out in Zerodha?
Yes, sir. So I'll just copy this and share it in the chat. You can just copy it and then get all those things. And Ganeshwari agency, sir. Yes, the strategy is similar to a naked call buy. The difference is uh, here when I'm managing the put option by bringing it closer as and when market is moving in my direction, that won't be possible if you are buying an at the money call option in December. That's the reason why I'm deploying a strategy instead of a naked call buy.
Come again, please. Come again.
That was the doubt of Ganeshwari sir. That's why it's actually a bit complicated thing. That's why I just spoke to him. So he was asking why I'm not buying at the money call option, because at the money call option buy of December will also have the completely same 100% same risk reward graph. But when I'm deploying a strategy, I can manage it by bringing in the put closer. So that won't be the case if you're buying a call option naked.
Okay.
High risk or low, which is better for strategy. It's the same set because this strategies, if you check the Vega of this strategy, let me clear this out. Okay, I can just show it on my options. So why the question of low wicks and high wicks comes? The question comes when the strategy is dependent upon Viga. So here, if you check the Greek, it is Viga positive. So you will make money if there is a spike in IV. So obviously, low IV environment will be better to deploy this strategy. Web website.
Two questions I also wanted to put it to the.
Yes, sir.
First one is not a question actually, rather it might be a suggestion. It means
Yeah.
that this policy can be employed anytime. Means anytime in the means ki you need not to wait for any level of Nifty to deploy your first lot.
No, sir. We need not wait because these are investments. So investments depend upon at which juncture you feel it is right to deploy
No,
your
no,
money.
and with the strategy we are buying the put protective puts, and also it's quite okay to invest anytime if you feel so.
Yes, sir. But yeah, you can deploy it at any point of time. But it's always better if you make your investment once there is a dip.
Yeah, of course, of course, of course,
Yes, sir.
of course. And another one I seen IX on your watch list. Have you done
Yeah.
anything on the IX?
Yeah. I actually have. I did like made a position after the crackdown. So I have taken this put ratio spread. Just a IV play. So like if IV cools up, I'll make money. So that is the idea.
If in 5 minutes you could strategize that, also the people will be beneficial. I think so. If
Sure,
everybody is,
sure.
wanted to, otherwise need not to go about that.
Yeah, it will be very short. I can just explain. So see, IX has already fallen down from around 150 to 120. So that's a 30-point fall. 150 mein. It's around 20% plus. So once a 20% fall has happened, the probability of it falling by more 20% is slightly on the lesser side. So I have taken this strategy in a hope that either it will retain its value, or even if it goes down, I make some money till 100 rupees. So I'm safe till 20 more percent. So that was the basic idea. Plus IV has increased. So if IV cools off, again my M2M will turn green and I can book my profits at whatever point I want to.
Thank
So
you.
a slightly like higher option Greek's knowledge is required to understand it in full pledge.
I
Yeah.
got that. Thank you.
Yes, sir. Yes, sir. Please take monthly income of the strategy.
So should we wait till December to exit this trade, or can we take some profit
Sir,
taken very early?
yes, so this is an investment. So we won't be exiting. We will be only rolling it forward. I'll come back to you, Phil Patel, sir. So we'll just be rolling it over. So once this expires at around October or November, at that point of time, the theta decay in the December put option will be very high. So it won't make sense for us to hold that. So at in let's say October or November, we will roll to the next year. So 2024 options we will be selling in October or November. That is the thing.
Okay. Then again for next June or then next December, means 1 year.
You can go for June, but it's better if you stick with December because December options will be much more liquid than June. In October or November of this year, the 2024 options, December options will be more liquid than the June options.
Okay. Okay. Thank you. Thank you. I got it. Okay.
Yes, sir. Sir, monthly income. There is no monthly income here, sir. The bonds which I showed you, those are debt funds. So what happens in debt funds is, if I tell about government securities, it is a form the government is taking loan from us and guaranteeing us 7% return on the investment. So till the time the contract is maturing, so the government funds which I have, so these are 2027 expiry government security. So this is telling ki I will be making 7.4% return each year till 2027. So that is what. So 7% we will be making each year, and that money will in government securities the money comes bi-annually to our bank account. So 3.5 or 3.6% of the entire amount which is invested that will come to your bank account every 6 months. Yes, sir. Vaibhav sir, we can make this for June, but sorry, for December. But I'll suggest to wait for a dip in Nifty, and after that, you think about taking this strategy because we are at all-time high. Obviously, only once we have hit all-time high can we make a new all-time high. But the probability of it going down, like the probability of making more money once we are investing at a point where it is not at all-time high, is better. Hence, I'm suggesting to wait for a little bit. So the objective of synthetic future is it is our investment. Instead of going for Nifty Bs, we are going for synthetic futures just to save uh, on the margin required and to have a protection.
Sthita,
Yes, sir. Vaibhav sir. Yes, sir. Yeah, you can tell. Yeah.
Vishnu. Yeah, actually, this margin that we'll be utilizing.
Yeah.
So since this is positional, the 50% you need to have the non cash component, cash component, na 50% for
Yes,
this
sir.
to, yeah. Like if we have GSEC, so it should be like
GSEC is a
100%.
cash component, sir. So yeah,
Yeah,
GSEC is 100% cash.
100% cash. Yeah, so we can use and utilize the entire GSEC to take this position.
Yes, sir. We can use entire GSEC to take this position. We need not
Okay,
keep cash.
okay.
Yes, Vaibhav sir. So whenever we think Nifty is bottoming out, at that point of time, if we take the strategy, it will work very well. Uh, Anyone else, if someone has any doubts or someone wants to talk about any other thing, we can discuss right now, or if not, we can end the session.
Have you tried
Hello.
ETF option group?
Yes, Naveen sir, tell me. Satish sir, just wait for a second.
Yeah. Good evening, Sitaji.
Good evening, sir.
Right now the Nifty is 18,500, right?
Yes, sir.
I have just joined you late. Can you, in short, tell me if I have to take a position or you have to take a position on Monday? As per your strategy, what should be the general, in short, in brief, what should be the strategy over there?
Yes, sir. So if you understand the strategy, I'll tell if you want to follow it like in a systematically. If you want to follow, you can just sorry, you can take trades once we are near the 200 moving average.
Okay.
Just give me a second. Yeah. So if we make a 200 moving average on the daily time frame, once we are near that, we can take positions. So we are up by around 700 points. So once we crash by 600, 700 points, you can take the positions.
Okay.
Yes, Satish sir.
Now, my point is, have you tried using the Nifty Bs option method?
Yes, sir. We can do the same thing using Nifty Bs. What I am doing is whatever call sell my profit I am generating, that I am adding to Nifty Bs instead of buying Nifty Bs. The other thing is if I want to keep all my profits in the F&O side. So like I can show it as business expense. I don't want to have uh,
Capital
uh,
gain.
capital gains. That is the other reason why I am taking this. Yes, Rajesh sir, I am suggesting one lot for 10 lakhs, but the actual calculation is 18,500 into 50. So sorry, 18,500 into 50. That is around 9 lakh 25. So for 9 lakh 25,000, you can go long for 1 lakh. But for easier calculation, 10 lakhs is what I am going with.
Yeah, Sista, I have one question.
Yes, sir.
Yeah, I have Nifty B equal to 1 lot of Nifty,
Okay.
and I had sold a call of 18,500, which is now in the money right now. June
Okay.
expiry. Okay. So what do you suggest? Should I keep this Nifty B and book a loss in the money?
Sir, I can't give you this financial advice because see, there can be a lot of case. The case can be ki now you booked profit and market went to 17,500. You will be
Okay.
very happy because Tita gave a very good suggestion, and then you can purchase at 17,500. The other thing can be market went from 18,500 to 19,500, and at that point of time you'll be cursing me because Tito
No, no,
suggested I
no.
booked profit. No, no, I'm
Then,
just saying the general thing because anything can happen in markets. I don't know where Nifty will go after you sell your holdings. So I
yeah,
am not the right person to be
yeah,
suggesting.
I got your point. Basically, I had taken this as a option wheel strategy, and
Yes,
I
sir.
was accumulating. And now, still, I will be in a profit. Around 4% profit is showing my Nifty Bs.
Yes, sir. So if
So
it's an
I
option
was
wheel
thinking,
strategy
so what
trade,
should
then you should book
I?
profits.
I should
If
book.
it's a OWS trade,
Yeah,
you should book profits. What I told today, it's an investment. That we are not trading here. So
yeah.
the base structure is an investment. So in OWS, that's not the case. In OWS, we need to book profits once our call sell is in the money.
Right, right. Okay, okay.
Yes, sir.
Okay, thanks. I got it.
Yes, sir.
थैंक्स फॉर टेकिंग टाइम आउट एंड बीच बीच में कभी कभी कुछ कर लिया करो यार, ऐसा ही कुछ थोड़ा सा
Yes, sir, sure.
गाइडलाइन.
अगर मतलब if it is helping people, I love to do it.
या
Actually, I did it a lot. मतलब मैंने 2-3 बार पहले किया है. The thing is, like this time, a lot of people were engaged and they were asking their doubts and everything. Usually, पहले क्या होता था? Maybe around 30-40 people will join, and at the end of the meeting, just 5-10 ही रुके रहे होंगे. But this time, around 30 joined, and around 26-27 are still there. So
No,
I'll
if two people are getting benefited, na, then also it is worth doing so. Okay.
Yes, sir. I'll definitely think about it and do it in the future as well. Yeah, if
Yeah.
anyone is taking. Yeah,
Okay.
thank you.
Just picking up that I think you have been a fantastic expiry trader. Do you want to share some nuggets on that?
Thank you, sir. So I'll tell you, sir. Uh, uh, don't think I'm boasting or anything, sir. Being an expert expiry trader, it actually requires a lot of skill, and that will come only after you are trading it for a very long time. So I have been trading since 3 years, and I don't remember or recall any Thursday which I have missed. I have been there trading each and every expiry. I have not missed a single expiry. And whoever is like trading expiry strangles or something, the entire idea is again there we have to maintain a positive expectancy. Whatever options we are shorting, we need to think कि what is the probability of that option going out of the money. If 70% probability है कि out of the money जाएगा, then we can trade 1:1 risk reward. If 30% मैं अगर एक in the money option बेच रहा हूँ, 30% probability है out of the money जाएगा, at that point of time I'll have to have a risk reward of 1:5 or 1:6 just to have a positive expectancy. तो वही चीज ही maintain करना पड़ेगा throughout the entire day, and throughout the entire day you will be selling and buying a lot of options. So वो रहता है. Plus और थोड़े चीज भी है कि sometimes I also buy options. I have started buying options because अभी इतना VIX कम है and इतना spikes आ रहा है. So option buying is making sense at this point of time. So I'm also trying that in my like expiry date trades.
Yeah, you were sharing the earlier that's you bring the hedges inside
Yes,
buying.
yes, sir, yes,
That's
sir.
what you are doing, na?
Inside hedges. Yes, sir, yes, inside hedges.
Basically, you are
So
buying only, but you are using the hedges to earn rather than to protect.
exactly, exactly. The hedges are done for gains instead of for protection.
Yeah. Okay. Okay.
And when do you come out of that December trade?
Sir, we will come out near about October or November, at which point of time the hedge purchase will lose a lot of amount of value, because as and when we approach expiry, the theta decay increases. Hence, at that point of time, we will roll over to the next year.
Okay.
Yes, sir. I guess,
And when do you decide to add to the position? Like if
sir.
the market is going down? Yeah.
Yeah, sir. My idea was कि I'll add 1 year worth of investment. That's why I went long 10 lots. So it's a discretionary decision, sir. There is no rule that. we will just add whenever it seems it deems fit for us to add.
Just to add one follow-up question. First of all,
Yes, sir.
thank you so much for doing this session. I just
No
wanted to
issues,
know
sir.
if you feel comfortable sharing, like if I have invested total 100 rupees,
Yeah.
how much money, how much capital you have invested in this strategy, then the weekly, then the option wheel also, I think you do some variant of it, if you don't mind sharing. Thank you.
Yes, sir. I can share. So, if my portfolio is around 4 CR, I have deployed around 1 CR in this strategy. 1 CR in F&O long. Around 1 CR I am doing option wheel strategy. So that's 2 CR worth of equity investments, and the 50% remaining is in debt funds. And I use the margin for expiry trading and some other trade. Just like I had a IEX position right now. So the rest margin is utilized there.
Okay, okay, got it. Thank you so much.
So 50-50 ratio of equity and debt. Yes, if anyone else has any doubts, we can continue or we can stop it here. And again, I have told it multiple times in the group itself. If anyone faces any issues, you can always contact me. I'll try my best to help.
One question, if I can ask about the IEX, I think I discussed with you on the group also, if you remember.
Yeah. You had shorted off 115 put option, I
Yeah,
guess.
yeah, I
Yes,
sorted
sir.
the 115 option. So, what was the reason of you doing a ratio of 1:5 instead of
Yes, sir.
shorting
Yeah. Very
cash?
good question, sir. Very good question. So here, when IX has come down so much, I don't know. It must be because of some news.
4-1
Yeah, it must be because of some news.
1101
Uh,
phone जो अशोक का नंबर क्या है ऐसे करते
yeah. So it must be because of some news, but I didn't do a cash secured put. I did as a IV play. So IV of that option, IV of those strikes have increased a lot. The 100, sorry, I'll show you. The 105 put option which I shorted for 1.57 rupees on an average, it was trading at around it was trading at around 20 paise the day prior to it. So from 20 paise, it made a high of around 4 rupees, which was 20 times the pricing. And also the IV, like this was because of delta move. But if you just check IV as well, IV must have increased because it was a significant move. So my idea was, if it like goes down further, then also I make money. If it goes up as well, then so I'm in credit, I'll anyway make money. That is the idea. The idea is, if it stays between 120 and 105, I make slightly more than what I would have gotten with a simple cash secured put or a naked put option.
Okay, okay. If it was a stock which you would be comfortable in taking delivery, then on a 1 CR account, what is the, like, one lot is, I think, for 5 lakh rupees in IEX. So how
Yeah.
many lots do you have taken on a 1 CR account?
Sir, I won't take more than 2 lots because I don't intend to keep more than 10% of my investments in small cap stocks.
All right. Thank you so much. It really helps. I'll be troubling you
No
again on
issues.
the group in case I need some clarification.
Yes, sir. No issues. No issues. You can
Have a
always
good day.
contact me.
Thank you so much. Bye bye.
You too, sir. You too. Vaibhav sir had one question. I'll take a question. Market is going down for the whole year. Yes, sir. If we are booking a loss, you should be happy because by default you are not losing anything. You just lost 1 year of time. You will recover around 60 to 70% of the amount with the debt fund, and the rest 20-30% or a little more also you can recover by selling weekly call options. So the only thing which you lost is the 1 year of time. So you will roll over to the next year expiry if you are booking a loss. I hope that you understood that.
Yes, sir. Thank you.
Yes, sir, no issues. I guess that is it. We can close the session right now.
Yeah, thank you,
Yeah,
Sthita.
Sista, if possible, sometime next month or whenever you get time, can you
Yes.
take similar session for calendar trade like expiry trade?
Uh, Expiry trade or calendar trade? What are
Sir,
you?
sir, plan
Calendar,
for expiry
calendar.
trade, sir.
Expiry trade, sir. Try expiry trade.
Okay, sir. I'll try. Sir, I am telling the truth here. Expiry trade is something which everyone will not be able to do. That is the truth. I am keeping it without like a lot of people, all the trainers, they will tell you, I will give you a strategy which will be generating profits. What is working for me might not work for you. Because I might be doing a lot of adjustments. I might be having the right psychology. The same might not be the case for everyone. I'll teach the expiry strategy, but it might not be fruitful for everyone who is learning it. I'm telling it beforehand. Anyone who is interested, I'll teach that in the next session.
Yes, sir. Please
I
go,
would,
sir.
I would be interested for the calendar, especially the adjustments, if you think about it anytime.
Okay, sir. Calendar I might not teach because I have done calendars, but I have not been very successful for that. So I might not be the person who will be teaching that.
Sita, please plan for expiry for next time.
Yeah, yeah, sure, sure. I'll plan for the expiry day. See, I'll tell you what I do. It's not the key expiry related strategy. I'll tell you what works for me. I'll teach that.
Yeah, like in the session you're telling, right, like you're aiming for just 0.5% weekly. So yeah, so if you explain that, like how to do it, how to
Okay, if you
initiate.
if you have done so much research, I'll obviously teach you, sir.
Thank you so much. Yeah.
Yeah. To shift key up and typing console. Okay.
I think everyone has posted the doubts.
Yeah. So one more doubt, Ganesh Shwari sir has. Yeah, sir.
Yeah.
Maybe in the first or second quarter of the year, it will be illiquid, but from only on the first quarter it will be illiquid. From March and April, the December options, all the strikes pick up very good liquidity, so should not be an issue. You're most welcome, Srinivas sir. Yes, sir. I guess that is it. I don't think anyone else has any doubts. We can close the session right now.
Yeah, yeah.
Okay,
Okay.
thank you. Thanks a lot, sister.
Thank you,
Thank you
Sthita.
very much.
Thank you. Thank you.
Anytime, sir. Anytime. Anytime.
And you have always been
Thank you very
replying to
much.
the DMs. I have made a lot of doubts and all these things. You keep on replying the DMs. That's very nice of you.
Yes, sir. No issues.
I keep on
Thank you.
sending you messages also. That's why.
Yes, sir. Yes, sir.
Okay.
Yes, sir.
Thank you,
No issues.
Sita.
Thank
Sita,
you.
you have a very
Thanks.
bright future. You are very modest and very helpful as well. So we have a very bright
Thank you
future.
so much, sir. Thank you so much. Thank you so much, sir. Okay, sir. I am leaving then.
Thank you.
Have a good
Okay,
day,
bye bye.
everyone.
Thank you.
Thank you. Have a nice weekend. Wonderful.
Bye.
Thank you.